In this video, I'm going to do a basic sample of break-even analysis and target profit analysis. We're a company introducing a new model of wireless speaker, and we're trying to get an idea of how many do we have to sell to break even or meet a certain target profit. Our selling price per unit is $430, variable cost per unit is $190, and fixed cost not per unit but total for the year is $624,000. Our break-even point is the point at which profit is zero, or to say it another way, the point at which revenue just covers our costs. Our formula for calculating break-even in sales units is total fixed costs divided by contribution margin dollars per unit. So another way to think about, we said break-evens also revenues just cover our costs. Another way of thinking about it is the point at which contribution margin, which is sales or revenues minus just our variable costs, just covers our fixed cost. So in this example, if our fixed cost is $624,000, we'll compare that or divide it by how much each unit is going to contribute to first covering that fixed cost, then hopefully if we get past break even, help cover a profit. Well, each unit contributes the selling price of $430 minus variable cost of $190, which I don't show here, but that's $240. If each unit contributes $240 divided into the fixed cost of $624,000, we would need to sell 2,600 units in order to break even. If we wanted to know what the sales revenue needed to be versus the number of units, we could simply take the 2,600 units times the selling price per unit, 430. But if we wanted that anyway, we could have started out a little bit different way. Instead of dividing fixed costs by contribution margin dollars per unit, we could have instead divided it by the contribution margin ratio. If you recall, the contribution margin ratio, I show it here in the denominator, starts out with the contribution margin per unit, 430 minus 190, but to get it to ratio form, it divides it by the selling price, which would be $430. I'll tell you, if you calculate this out, it's not a nice round percentage, but if we then divide that by 624,000, we would need to sell $1,118,000 worth of those wireless speakers in order to break even. Well, it's nice to know here's the minimum amount I would need to sell to think about, is that even practical? But for most companies, they want to also earn a profit. So in the second part, we're looking at how much would we need to sell in order to earn before tax profit of $180,000. We're just going to tweak our original break even. Instead of just covering fixed costs, we want to add to it our target profit and still divide it by what each unit contributes per unit, the contribution margin per unit. So take that 624,000 of fixed costs, add to it the 180,000 we also want to earn, divide it again by the $240 of contribution margin per unit, which is the $430 selling price minus variable cost of 190. And if we want to earn before tax profit of 180,000, we would need to sell 3,350 units.